What is your view on how AI is going to impact the future of work?
It can replace certain type of things that people are doing already. AI is also becoming far more capable very rapidly. As AI develops, certain types of jobs will shrink for sure. It is not going to be a painless journey.
What are some of the white spaces or deep problems that are yet to be solved?
The entire space of validations. If you apply for a loan, I have to validate that the Aadhaar that you have and the PAN that you have are both yours. If you went to Gujarat, then your name may be Anand Shah, but it may be Anand Bhai Shah.
How does a 10% scrappy startup sell to Axis Bank?
So a few things I would say. One is this.
We are staring down a massive $100 billion domestic market opportunity in India, and 50% of it is probably going to be in the AI space. Right? The mission of this show is very simple. We want to give a 360-degree view of the opportunity, right, across founders, operators, enterprise buyers, and investors on the massive scale of this opportunity and what does it take to win in this space. Right? To kick off episode 1, I could not have asked for a better guest. Right, super excited to welcome Sameer Shetty, Head of Digital Banking, Transformation and Strategic Initiatives at Axis Bank. On a personal note, Sameer and I go back a long way. We both went to school at IIM Bangalore. We were both colleagues at McKinsey, where Sameer served several large banking institutions, right, over many years before he made the switch to being an operator. In your current avatar, Sameer is leading AI and digital revolution for Axis Bank. Sameer, you went from advising banks to actually owning digital and AI for Axis Bank. What is the biggest shock / difference as you made the crossover?
For me, actually, the journey was very smooth, primarily because I was serving Axis while I was at McKinsey as well. So I knew the bank quite well. But obviously, there are learnings. There are lots of learnings. There are many muscles that you just don't develop when you're in consulting. So as an example, perhaps the largest team size that I would have handled while I was in McKinsey was, let's say, 30 people across all the projects that I was doing. And 30 is a very large number actually in the spirit of consulting. But in the bank, my team is now about 1,000 people.
Wow.
Right. So kind of this moving from a very small self-organizing teams to running large teams, that I think is the biggest learning. And there are absolutely great folks in banking, people who know their stuff really well. But managing such a large team is a very different experience compared to managing a smaller team.
In early projects that you did, right, around digital transformation, that probably did not work out the way you imagined or did not go as per plan. And did that give you a view on how banks adopt technology? Very different from what you've observed while within McKinsey.
So firstly, the number of things that have not worked is a very long list. It's a very, very long list actually. And I would say there are two big things that I kind of learned. First is, when you start thinking digital, you always start thinking happy paths, right? The problem in banking is that banking is so complicated that actually the edge case is the average case, right? And it's not like the happy path is the 90th percentile case and then you have 10 percentile to solve for. The edge case is the maybe a 60th percentile case or a 50th percentile case. And so you really need to think about all the, edge case scenarios. And unless you do that, you just don't see adoption. And there are very many products which now have been in the banking industry for 4-5 years, but their adoption is very, very low because the edge cases are not, counted for.
One interesting stat I noticed is only 30% of all digital consumer journeys in a bank end up in a purchase. So while 100 people start the digital journey, only 30 end up purchasing. It's a huge drop off. So
that's actually a great funnel. I think the real number will be closer to maybe 3%.
Wow.
And not 30%.
Not 30%.
Yeah. There will be some very simple products where you will find this kind of a funnel. But if you go to most products, then the funnel will be 3% actually is a good funnel. If you have a 3% end-to-end funnel, that's a good funnel.
Wow.
Because there are just so many drops. And particularly when you think of credit products, there are so many bank-induced drops. Like we don't want to underwrite the guy because, whatever, the credit score is not good, or that person's name features in some fraud list or whatever, right? We have some suspicion. So that funnel becomes very, very narrow in banking. And so just to your point, thinking about how you can manage that is
as a challenge. So what I heard you say is 80-20 really does not apply here. You still have to solve for the 50% of...
So there are two reasons why 80-20 doesn't apply. Reason one, and maybe this is actually my another shock moving from consulting to banking, right? Like consulting is you focus on the 20% of things that have 80% of the impact. And then the rest you say, look, kind of let it be, In banking, it doesn't work for two reasons. Reason one is this, which is the funnels are very, very sharp. Reason two is that you can't have a single error. In the sense, you can have errors, but you can't have regulatory divergences. And even one case, whether you do one mistake or whether you do 10,000 mistakes, it is the same. And so that's the other kind of reason why 80-20 doesn't work.
Got it. I want to segue a little bit into the macro view on AI. What is your view on how AI is going to impact the future of work?
So see, we'll obviously deep dive into various use cases as we go through. But I think what we are seeing now is that some of this AI stuff is real, meaning it can replace certain type of things that people are doing already. Already we can see this happening. Now, obviously, AI is also becoming far more capable very rapidly, right? So our learnings in this front are the following. First is, if you are expecting AI to do 100% right job, it doesn't work, right? So if can AI replace somebody who's doing a transaction today, we don't have the confidence, because the transaction has to be 100% right. It can't be 95% right. You can't have 5% wrong transactions, right? So there we do not have the confidence today. Maybe sometime down the line that will also come. But can AI do 70% of the job? And then a human being takes an additional call. So as an example, when you build digital journeys, you do write requirements, right? So today, approximately 90% of our BRDs are written by AI. They are about 65-70% accurate. So there is still a person who has to look at it and, do a little bit of value add. But that person's productivity is fundamentally different or better compared to what it was earlier. Similarly, some of these data entry jobs, we'll talk about this subsequently, we are seeing very good outcomes. Again, we cannot replace the human being 100%, but we can reduce the human being's effort very materially already. So what does that mean? I think as AI develops, my sense is certain types of jobs will shrink for sure. For sure, certain types of jobs will shrink. Certain types of jobs will become more productive, which is, the kind of one analogy is that if you think of when people were using physical spreadsheets and then moved to Excel, right? The person didn't vanish, but I think the amount of time that the person was using in creating the spreadsheet went down dramatically, and the productivity of that guy went up significantly. The job didn't vanish, but the job changed, right? So I think this is kind of the second
current mental model that you have.
Second, yeah. But I think there's a third set that will happen, which is there will be AI jobs. Right? There will be jobs that come because of it. Like, one kind of very interesting anecdote, someone I know, a colleague of mine had told me, is that if you went back a few hundred years, like even 150 years, there was no notion of an entertainment industry. Because there was no notion of entertainment. People worked 7 days a week. Right? And maybe 150 years is not the right this thing. Maybe it is a couple of hundred years. But people worked all 7 days. They worked from 9 to 6. And then they went home, had their food and went to sleep, like broadly. So when industrial revolution happened and when electrification happened, then, people started to find free time. And that's when, first Sundays became a holiday, then Saturdays became a holiday, and then in those holidays people had something to do, or even on the weekdays they would come back home early, and then they would have something, they would have money to spend on something, is when the entire entertainment industry propped up. Now there will be a version of this
With AI.
for AI, right? And there'll be something that will come up. So I'm a more optimistic this thing in a person in this scenario of.
You're an AI believer. You think it's net positive for you?
I am a believer in humanity, and I think human beings are very adaptive, and so they will figure out ways to
Stay relevant even in the
stay
future.
relevant even in the new world. It is not going to be a painless journey, because moving from doing a certain type of job to doing an AI type of a job is not going to be easy. It is going to be painful, but over a generation, I'm sure we'll figure out how to get this.
I want a little bit double click on banking and productivity improvement, right?
Sure.
Few stats that I want to put out, right? India is probably one of the very few countries where the banking OPEX ratio is increasing as opposed to decreasing, right? So from 2010, it was 1.8%. In 2024, it was 2.1%. Cost to income ratios have also gone up from probably 47% to right now at 48.5% in 2025. Employee OPEX has grown by 2.7 to 3x in the last 10 years. Non-employee OPEX has also grown by 3.5x. IT spends of banks in the last 10 years have grown to probably 5.5% of revenues. That's roughly a 5x jump in the 10 years. But despite all of this, the productivity improvement has gone up only by 1%. Most of the growth seems to be coming from capacity addition, right? So my question is, has digital delivered on productivity? And do you believe AI can deliver on productivity for banks?
This is a fantastic question. I think there is now enough and more, some of the data you read out, but there is now enough and more evidence that vast majority of tech spends over the last decade have not delivered ROI. Right? And there are 3-4 things at motion. So first, on your data itself, see the data you have is a little, see the OPEX ratio, the cost income ratio you mentioned. Cost income ratio is cost by income, and so it's quite volatile if you look at banking, because let's say the NIMs go up, then suddenly it starts to look good. If the NIMs fall, it suddenly starts to look bad. So there is more to it than what you are saying. But a fair point is that technology investments, have they delivered ROI? In certain cases they have, but on overall, broadly, globally, there is enough research to say that that hasn't fully borne true. I would actually say that India is done better than the
compared to other
compared to the
geographies.
rest of the world. Yeah. Now, why do the numbers look like this? So there are 2-3 reasons. One reason is that cost income is a function of cost and income, and there are various things. It's A, is volatile. B, if you look at it, there are various things that are happening that are also concerning income growth, right? There are multiple things happening around reduction in NIMs, reduction in fees, etc., etc., etc. So there is kind of that one theme. Second, cost itself is not just tech. So tech cost, as an example, for us is about 9% of our total OPEX, right? So 90% is somewhere else, right? Now, there are many costs in banking which are nothing to do with tech and productivity and so on and so forth, right? So there are those costs which have gone up. So as an example, for us this year we had to, there's something called there's something called priority sector lending. If you don't meet your targets, you have to go and buy priority sector lending certificates. So we had to buy a large quantity of PSLCs. That just the incremental cost this year is about 900 crores. Compared, like incremental, right? Not even over. So there are things of this nature that come. So there is that. But if we take out all of this, there are 2 things that have happened. Item number 1 that has happened is that this is a treadmill. So let's say you invest in building a great app. Your peer is also doing the same, right? So maybe there are 5 banks which have invested and built a fantastic app. Some others maybe a little bit behind. But as an industry, if you look at bank to bank, 2010 to anyways, very different era. But even if you take 2020 and 2026, you will see bank by bank that their tech is far better and their customer experience is far better. Having said that, the customer has moved on, right? Because the customer is seeing the same or similar improvement across. So does that increase your, quote unquote productivity or income from the customer? Not necessarily, because, however, had you not made that investment, you would have lost.
That's okay.
You would have lost the customer. The customer would have gone somewhere, or the customer would have not have done that business with you. So there is that. Second is that the cost of technology itself has gone up materially. So kind of we were actually the first bank to move to the cloud. We did some lots of very interesting stuff on AWS and so on and so forth. But actually, cloud is more expensive compared to on-prem. When you get to a certain size, cloud is great when you are not at a certain size and when you need to share infra and so on and so forth. And by the way, cloud is great from many other angles. Cost is one angle, but there are strategic reasons to do cloud because of the flexibility it provides and scalability and the kind of functionalities and so on and so forth. So lots of benefits. But if you did gigabyte to gigabyte comparison of cost, after a certain scale, on-premise materially, it's not even like percentages don't do justice type of cheaper. Similarly, all banking tech was product, right? And the product was bought on a license basis. The new tech stack, the kind of the entire SaaS world is usage based, right? And that just doesn't work. Like if you kind of look at the economics, the costs go up exponentially.
On the tech side.
On the tech, on like if you did license cost or a package cost versus SaaS, the SaaS would be materially more expensive compared to buying the license or buying kind of whatever, doing a one-time OPEX and then an AMC or one-time CAPEX and then an AMC, right? So some of those models have also changed. So costs have also gone up. So there is that. And third is the productivity jump that you are saying, which is in my mind kind of a little bit, it's the first point itself that you are investing in tech. Like let's say earlier you were doing loans using paper and pen. Now you built a great tech, right? But it's not like your competitor is also on paper and pen, right? They are also moving. So this is a treadmill and people have put in a lot of money. And by the way, there is the third component, which is the wasted tech, quote unquote wasted tech, which is, there is this notion of the Silicon Valley syndrome. So the Silicon Valley syndrome is that the CEO goes to Silicon Valley on a Thursday, meets some startups, gets very excited, comes back on a Monday and says, I want this, right? And the entire bank kind of drops whatever they are doing and they start running after that. And then 2 Thursdays down the line, he goes back to Silicon Valley and meets another 2 startups and says, I want this. And then comes back and, kind of folks then shift focus to this. So there is that wasted tech as well. The Silicon Valley is a little bit of an exaggeration to make the point, but there is investments that have gone into tech which haven't necessarily delivered the right business outcomes. So all put together, I think.
All put together, I think there are enough and valid reasons that you laid out as to digital has not delivered the ROI as expected. It has obviously made lives better in very different ways. Do you see this changing with AI?
So I think there are, there are places where digital has definitely delivered ROI, which I think will happen in AI also. But having said that, I think the biggest question in our minds, as an example, on AI, we are kind of very keen, we are very clear that it has benefits, etc. But this ROI question is a
biggest question.
Is a question, right? Now, where has digital delivered ROI and AI, I'm sure will deliver ROI is, this loans example. So earlier the loan processing would have cost us, let's say X rupees, let's say 100 rupees, right? That 100 rupees includes the cost of taking the paper. The sales guy has to go to the customer has to sign it. He has to come back to the processing center. Some manager is looking at it, some entering it, etc., etc. All of this cost is, let's say, 100 rupees. When we do digital, then there is no form. The employee doesn't need to go to the customer can do it on their own. He doesn't need to go to the back office because the application goes directly. A lot of the data is actually fetched from systems, automatically put into systems. So nobody needs to kind of sit and type it into the systems. A lot of the calculations like the credit model, etc., run automatically. You don't need to nobody needs to kind of enter into some system and get the data out. So all of this, that 100 has become, let's say, 80. Or 100, not 80, 100 has become 20 or 30. This is real. And in AI, we will see more of this. That I think is the cost side of AI, the cost use cases of AI are, I think, more advanced, and they are clear in identifying the value that will get delivered. The revenue side of AI is where I think the largest potential lies, but also the largest question mark also lies.
When you say revenue side of AI, you mean the impact of AI on growth or customer facing stuff, or?
Yeah, exactly. So, can AI help me enhance my funnel, or can AI make outbound calls to customers and get them convinced to buy whatever, a loan or a mutual fund or whatever else type of stuff or can I make my app, I put some AI features in the app and then customers engage more with me and I get better wallet share type of use cases is, I think, where both the massive potential exists as well as the massive question mark.
Understood. I think that's probably a good segue into where do you see the biggest impact of AI on banks' operation, right? Between front office, middle office, back office, compliance, corporate roles. When we spoke last, you mentioned there are some 9 pillars around which you're using AI. Can you unpack it for the audience as to where you see the biggest impact of AI?
Yeah. So see, I think if you look at banks, so firstly broadly there are 9 of these buckets, but at the highest level there are 3 types of impact that AI can deliver to us. One is reduce costs. Second is get us new revenues, right? And third is reduce risk / compliance issues, etc., right? Which is a control function equivalent. That how can we make ourselves better compliant, lower risk, etc., etc., etc. So if we take these 3 buckets, I think the first one is the most obvious one, but it is also the least impact one. And impact is still material, right? Now, why is this the case? This is the case because, see, one thing to understand about banking is that a large part of the bank cost in banking is in distributed front office roles, right? So as an example, we have about 1,05,000 employees. If you take the centralized roles, which is, operations, IT, product roles, strategy, analytics team, etc., etc., all of the guys who sit in central office or in central locations, right? That number is, if we stretch it, it's about 15,000.
15,000 out of the 1,05,000.
1,05,000. The rest of the folks they are in our branches, they are in retail asset centers, they are in, some kind of frontline roles, right? Now, the 15,000, the AI use cases are very obvious, and they will have, like we'll talk about zero ops and all of that, they will have impact as well. But if you get to a branch, now let's say a typical branch will have, let's say, 6 people, right? Small size branch. Now, if you take out some work from the branch using AI, this 6 will become 5.5, right? But you can't take half a person out of the branch, right? And by the way, even if that 6 became 5, you can't take one guy because it requires that there is a teller, there are 2, customer service guys, there is a maker and a checker, there is a branch head. You need like a basic setup
in a branch.
So going back to the point I was making, that a large part of the cost is in distributed front office type roles, right? So you can do cost saving in the centralized setups. You can also do some cost saving in the front office roles, which may not come out in terms of people getting lower, but it may come out in other terms, some other OPEX and, so on and so forth that you take out. And hence at the front end, the way of thinking about this is that whatever capacity you release gets redeployed to get better business, right? So you do better customer service, and so customers are happier and they put more money with you, or you are able to call more customers and, or you're able to reach out to more customers and get more business, right? So the benefit comes on the revenue side and not on the
Because the unlock is on the revenue side.
because the cost is fixed. Like you can take work out of, my daily, I'm somebody sitting in the branch. I was spending, let's say, 8 hours doing some data entry. Now that 8 hours becomes 3 hours, right? So my time has got released, but the cost remains. Now in those 5 hours, if I can get some more business and so on and so forth, it'll show on the revenue side, right? So that's kind of mental model wise, that's the way to think about banking costs and productivity and so on and so forth, right? And this is true for, by the way, all banks in the country. More or less, this will be this will apply. That large part of the cost is in distributed kind of networks. Mostly customer, they may or may not be customer facing, but it is very distributed. So you can't take out folks.
Understood.
All right. So going back to your question of hence where is the value? So the most obvious value is in the cost. It's very very clear and you know what to do to get it out. But that is not the biggest. The biggest unlock is on the revenue side, wherein if this guy can do, like 30% more income because, we've reduced the time at the front end, or if he can bring whatever else other this thing. And the risk and compliance one is so if you take these three, I think on costs is where we made the most progress. On risk compliance, we are in the POC stages. On revenue side, we are maybe a little bit more advanced, but similar stage.
Thanks, Amir. Do you want to double click on one of the areas, right? I think the framing that you meant is very useful. But do you want to double click on an area like, let's say, zero ops? You have spoken about zero ops and the impact of AI on zero ops. Do you want to double click on that?
Yeah, sure. So there are we've categorized AI use cases in multiple blocks. We won't have time to go through all of them, but let's take a few of them. First one is zero ops. So zero ops is an aspirational statement in our mind. The intent is to take out all operations activity from the bank, right? Now, if you take any bank, most of banking activity is around operations. So as an example, if you're making a payment, then there has to be a reconciliation. The payment itself is fully digital, but the reconciliation has to be done by, it is still, most of reconciliation is also automated, but there is some human being who's looking at the outcomes, and so there is that activity. Or let's say the other example is that let's say you are applying for a car loan, then we have a fully digital journey, but in the journey there are a few documents that we need from you. So as an example, we need the pro forma invoice. We need your own contribution receipt. So, bank can only fund certain percentage of the car. The rest of it has to be funded by you. So we need your receipt that you funded it. We need the insurance, that there is an insurance for the car, etc. So now these documents, the pro forma invoice of every dealer is different. There is no standard format. And there is no centralized source from which you can get the pro forma invoice. So you have to get it from every dealer and you have to read it and enter it into the system. Now, this activity can easily be done by AI. But we are, by the way, already doing it using
AI to do the document processing.
AI to do the document processing. We are doing it in phases. Right now, we are doing it to identify if the data matches. So, if you said that you are buying a certain model of car, does the pro forma invoice have the same model of car? If not, at the front end to the sales only, we will say that this is not correct. So, you have to correct it and then send it to the ops. But over time, once we get confidence that AI is reading the data in the right manner, the entry also will be done by AI. Right? Now, if we do this, then this dispersal can be real time.
Even post-sanction?
Post-sanction can be, it won't be real time, but it can be near real time because we'll still always have a checker. But just conceptually, this post-sanction activity can be done real time while you are at the dealer. So you go to the dealer, you like a car, you apply for a loan, you get the sanction, you give your documents, and you can go away with, you can kind of walk away with the car, right? So conceptually, you can take out ops, and there are different types of ops that we are working on, how we leverage AI to make it better. Now, the reality here is that we'll never get to zero ops, and particularly in banking, we'll, at least in the foreseeable future, I don't think we will not have checkers. We will always have, people who are checking the outcomes. So that is super critical and we'll always have. But the point is that if earlier one person was doing 10 files, now maybe one person can do 100 files. Right, because of all of this that we are empowering that person with. So that's the kind of the notion of the zero ops. So there is that one bucket that we are working on. The conversational is the second bucket, which is call centers or any kind of conversation. The technology is very similar. So whether you speak to a person or you write an email or you chat with us, kind of at the back end, it's very similar. So just think about this, like let's say you have lost your debit card and now you want to block it. So you call the call center. Now obviously debit card is a wrong example because you can just call the call center and the first prompt itself is whether you want to block it. So you can block it. But let's say you want to issue a checkbook for yourself. So now you call the call center. The AI can talk to you like a human being, converse with you, figure out. In a checkbook, you can get a checkbook for 10 leaves, you can get it for 25 leaves, and so on and so forth. It can do all of that conversation, and it can actually issue a checkbook to you. So the checkbook will come to your home. So here the AI is not just doing the conversation; it is also executing a few things with our backend systems. Right?
Taking the service request to closure.
Taking the service request to closure. It is not only just understanding the service request. It is working with various systems to close it. So that's the second type of thing we are working on, which is the conversational. The third type is this, broad area of risk compliance and stuff like that, wherein every product that we introduce or launch, we need to, it needs to go through a committee which approves it, and that committee has the product guys, operations guys, tech guys, but also all the risk compliance, all of these folks as well, who are looking at it from all of these perspectives. Now that note itself, it can be, the first version of it can be written by AI. And by the way, while the note can be written, the first set of comments can also come from AI. And then, all the other folks like risk, etc., need to only look at a much more refined version of the document. We should cut down TAT, improve their productivity, get them focused on the right areas, etc., etc. So that's something we're working on.
You have done many AI projects in the last few years, right? What have been some of the biggest barriers to adoption of AI, and what have been some of the spectacular successes that you've seen?
Okay, so firstly, we've been working on AI for almost 2.5 years now, but our real use cases are coming live as we speak. So maybe in the last 6 months is when we've
seen use cases in production.
We have one use case in production for almost 2 years now. That's that's kind of an internal chat GPT. So
knowledge management. Sure.
Kind of knowledge management. So let's say a customer walks into a branch and tells the bank officer that I'm a Hindu undivided family, and one of the people is converting from minor to major. I'm just making stuff up, right? I don't even know if something like this exists. But then now what do I need to do to change that person's constitution? Now this is a complex question. The branch may not have an answer right off the bat, right? So earlier what would happen is that they would call someone in the central office or in the cluster or whatever, who would clarify this question. Now they can go to our chat GPT and ask this question, and chat GPT will send the give the responses. So this is what we built for. This is now live for almost 2 years. We are seeing very good usage, etc. But here, like as an example, what is the P&L impact of this? It's not that easy to articulate, right? So the P&L impact items are kind of coming now in. So we've done some of the zero ops kind of stuff is live. We spoke about auto loans. There are a few others of that nature that are live. Some of these conversational are live. So they are just coming into this thing. In terms of going back to your question of what are the biggest challenges and then the
barriers to adoption
and where we are seeing. So barriers to adoption may be a second question. So first is biggest challenge in AI. See, number one challenge is this. It is very easy to do AI for doing AI. It's very easy to generate projects and then deliver. But to do AI so that we are transforming end-to-end business systems and it is releasing some P&L benefit is challenge number one. Right? It's very easy to create a bot and, bot can do lots of answers. Not even in POC, even in production. You can put a bot, a customer-facing bot, which will answer all queries that the customer has, let's say. Fantastic. Customer will enter. And by the way, I'm not saying that it's not value-adding overall, but they'll do it. Or let's say this document reading. You can take one very tiny sliver and read one document. It doesn't change the end-to-end process, right? And so then what happens is that you don't get the benefit of P&L outcomes on the process. Some sliver gets better. It releases some capacity, but that capacity gets used somewhere else because the bottleneck has just moved from one point to the other point, right? What everyone needs to do is we have to think of end-to-end journeys, end-to-end business systems, and think of how we transform that end-to-end journey and business system. And this doesn't come easily. This is not easy because obviously there is somebody who needs to think about it end-to-end, but B, end-to-end journeys involve multiple counterparties and, not one person in the bank. There are 20 other departments who are involved and you have to kind of get all of them along and so on and so forth. So that's issue number one. Second, I wouldn't say challenge, but it is something that brings down speed of AI. Is like, let's take this example of you asking for the checkbook. So there are two parts to this. One is the bot needs to understand that you want a checkbook. Second is that the bot has to go to some backend system and, get the checkbook issued. The first part, happy case, by the way, and this is our observation across now multiple use cases, that, when somebody would have thought of this, right? Now that guy went to someone and said that I want to build this bot which does this. Building this bot which does this in the happy case, which is, English language, one service, whatever, takes maximum 3 weeks. At the end of 3 weeks, you have something that works, by the way. That actually works beautifully. It is not just one pre-cooked POC. Some random guy can come and ask and it will also deliver. Edge cases take longer and then there is this life cycle. But even to integrate this with the core system is a 4-month, 5-month activity, right? Because core systems work via APIs and, they have their priority, they have to go through their life cycle, etc., etc. So that is a second, I would say, rate limiting kind of a.
It's not a barrier, but a bottleneck.
It reduces speed. It reduces speed. Conceptually, you could have put this bot out in 3 weeks, if not 3, maybe in 6 weeks. But it takes you 5 months. Right? Same in the zero ops, like the document reading. And this we read like some 29 odd documents. So every new document is a 2-week effort for happy path. Then you have all these edge cases that you have to continue to kind of, but the happy case of the document is 2 weeks to show good outcomes. But then to integrate, finally it has to go and sit in the core, the data has to go and sit in the core system and the core system has to do something with that data. That takes longer.
Got it.
So that's a second. So this is the first challenge, I would say. On barriers, Okay, so see the kind of all the AI discussion we had is again, these are all centralized programs being run, impacting everyone, but it is kind of, like there is a team which is running this and building this. Because of the distributed nature that we spoke about, the biggest value add actually is in personal productivity improvement. Personal productivity improvement is that, I'm a area manager and I have to do conversations with all sales guys in my area, right? So every day, they send me some data, I create an Excel, then I do some analysis, then I call guys and so on and so forth. In the world of AI, I don't need to do any of this. I can just go to Copilot and say, Copilot, please tell me which guy is doing what. And Copilot will give me like very specific, person number one, branch number one is great at savings account, but very bad at credit cards. And branch number two is this and so on and so forth. So I just call branch one and say, boss, savings account is fine. Credit card, what are you doing? Please tell me how many guys you spoke, right? So my work has shrunk from maybe 3 hours to 15 minutes. This is personal productivity benefit, right? I'm
As an individual,
as an individual, I'm applying my mind to say how my productivity can go up. The barrier to this is the individual, because the tool Copilot is there with everybody now. In our bank, as an example, we use Copilot. It's with everybody, and Copilot can read your wonderful feature. When you go to Copilot, it shows some prompts. So it was very simple. The prompt said, summarize all emails written by my boss to me in the last week. You click on that, it'll give you what your boss has asked you last week, right? Like fantastic features, right, of this nature. So that Copilot exists with everybody. Now, using the Copilot is kind of the adoption.
Is everyone using it?
Exactly. So one is everyone using it, but more importantly is everyone using it in the right manner so that they are getting the benefits out of using it is another kind of barrier.
You touched upon end-to-end systems design, right? I mean, if you have to see the real benefit of AI, you can't solve for a silo. You have to solve for the end-to-end process. How do you think about build versus buy in this context, right? Because the real impact comes when you're solving for end-to-end, which means someone needs to understand your process in detail and figure out how this solution can touch all parts of the process and make a difference. So typically, do you think about building these end-to-end stuff in-house, or are you open to buying, and how do you think about the build versus buy?
So see, our view on this is that we think of tech in three components. There is the core systems, there is the systems in the middle, which are all processing, analytics, workflow type of systems, and then there are front-facing systems, which are customer-facing. Core systems we always buy, because you need very robust systems, industry scale, and industry experience is very helpful, etc., etc. And actually, there is very little differentiation you can do on the core. Is typically credit debit, like you're kind of, it's an accounting system. It's kind of just doing very critical stuff, but very structured and very focused stuff, right? Then you have systems in the middle. Those we are flexible. Some we build, some we buy. Typically, we end up buying most of it. The front-end systems, our view is that it has to be proprietary to us. It may be bought, but then it has to be like, it is custom built for the bank. That's how we thought of tech in the past. Now, coming to AI. On AI, see, okay, so the other one is that how we work with partners, like Fintech partners is an example. So, if you our experience thus far has been that partners are most useful when they are bringing the partnerships that work are where they are bringing some very niche capability to us, right? So that niche capability could be in something that it is very difficult for us to build or very difficult for us to invest in, and they can do it much better, like getting some data or reading bank statements, this type of stuff, very niche focused capability that they bring. And by the way, they will benefit by doing it for 30 banks versus doing it for one bank, because doing it at scale is, it's improving their capability. But when people come with end-to-end stuff typically, which involves tech, but also knowledge of the entire process and so on and so forth, typically those are less successful.
So this is kind of counter to the point you made earlier, right? Because unless you solve for the process end to end, you're not going to see the ROI. So if I'm a startup or I'm a vendor who's bringing in a very point solution, it might move the needle in a silo, but might still not deliver the ROI for that, right? How do you address this?
See, the ROI ownership cannot be a partner's. And by the way, typically when the ROI ownership is a partner's, it is already a sign of challenge. Because somebody in the bank needs to kind of apply their mind and kind of own it and think about it, right? So it is the owner of that process, it's the owner of that journey, and there is always an owner of there's a product owner or somebody who's there who's owning that journey, who has to apply this push of how do I get the end-to-end benefit. The vendor partner should come and give like very specific solutions which enable that piece.
Understood.
And that is where, by the way, as an example, if you're doing something which is very specific, so let's say you have built a bot that can understand all languages with all dialect, whatever, right? You're the best, right? Now, and again, this is not the best example, but let's say you built this. Now that has integrated into our system. Now to replace you is very tough. Because you're already that good, and you're kind of, if you're generic and you're doing what the next guy is doing, then I will have two guys minimum, maybe a third as well, right? So that's the way to
For a startup or a founder to
think about it. Yes.
Where do you think, based on all that you said, if you were to advise a startup founder, what are some of the white spaces that you think are deep problems, niche problems that are yet to be solved that a founder can work on?
There are many actually. So the entire space of, for lack of a better word, I'll call it validations, right? So as an example, if you apply digitally for a loan or a credit card, I have to validate that the Aadhaar that you have and the PAN that you have are both yours. And in this, there are true positives, false negatives, false positives, and all kinds of combination. And the false positive rates are very, very high. Very, very high for various reasons, right? Like Indian names are, of like, if you go to the south, your name in Aadhaar can be a expanded one. In PAN, it can be just the abbreviations, right? If you went to Gujarat, then your name may be Anand Shah, but it may be Anand Bhai Shah in the PAN. In the Aadhaar, it may be Anand Shah. So now, for various reasons, these kind of things, and they are all pervasive. And going back to our conversation, why are the funnels so sharp? The funnels are so sharp because of some of these reasons, right? And some of these are ridiculous. You will find, like, if you go to LinkedIn, you will find all kinds of posts which are cribbing about why was I rejected. So genuine guy, but so this is a big area, validations, and linked to that, fraud. How can you do fraud management better using AI and so on and so forth? So that's a big area. On the the other side, now I think it's like this voice, etc. is very advanced. There are many people. But let's say video. Can you spot fraud in branches using the CCTV camera? Right? Or can you spot various other things? Because all our ATMs, all our branches are CCTV cameras. Again, very sharp video analytics capability, right? Like the capability you're building, bringing to the table is ability to take decentralized videos across. We have 6,000 branches and some 78, lots of ATMs. And let's say 20,000 points overall, or 25,000 points overall. You have decentralized videos. Now, can you do something to
use that data to drive better revenue? Because
drive some. See, you don't think of revenue. My suggestion to the fintech founder would be, you have it in your back of your mind, but you build the ability to look at the video and get the insight out, and which goes to in a usable form to the bank. Beyond that, I think it's the bank's job to think about how they use that to get the revenue or reduce the cost or whatever else. So there is that space. There are many spaces of this nature that you will find. But again, my suggestion to folks will be think of some, like the word used is moat, right? The fintech word, the new world, the new Gen Z or whatever they call it, moat. So what is your moat? And the moat can't be that I have a great end-to-end system,
So this is a very interesting mental model that you're painting for founders, right? If you're a founder, think of a niche capability on which you are extremely differentiated. That becomes a moat. Then that becomes a license for the founder to come work with a bank to deliver the impact. Just thinking of overall impact across processes may not be the best way to think about it. I think that's a very, very useful mental model. I want to talk a little bit about ROI. You mentioned about how the ROI has eroded for tech investments, because when you move from a on-prem license-based to more usage-based SaaS, right, the cost is actually even bigger than what you had planned for. Now, how does it change in AI, right? Because AI now, the marginal cost is not zero like it was in the software world, right? So you have to pay for inference for every use of AI. So how does that impact the ROI? And when do you believe the unit economics of AI will be such that it will drive significant enterprise adoption?
So AI costs are material, but also I think there is it's coming down, and the way to bring, like, institutions can do things to bring it down very materially. So as an example, like, when we went live with some of these things, we were using certain LLMs in a certain way, and it had a certain cost. Let's say it was 100. By just moving to certain other LLMs, the cost comes down by 60%.
50%.
Right? If you were to build your own SLM, the cost will come down from the original one by like to a tenth. So 90%. Then, does everything need to be an inference? Can you build something in between that, something has come in the past, then you kind of reuse? And so many things of that nature that you can do that brings the cost down. Plus, just generally, costs are falling. And the thing we are realizing is that for use cases that we are doing, we don't need the world's best LLM, which is all powerful, and so it has to do like one task and one task well. And there, I think if we kind of bring that compromise itself, it can bring down costs.
Got it. How does a 10% scrappy startup sell to Axis Bank, which is probably working with many, many enterprise partners and vendors? What would be your advice to founders? I mean, you did talk about the one point around picking a niche wedge and capability. Are there any other advices for startups that want to sell to banks like you?
So a few things I would say. One is this moat point, that kind of what are you bringing to the table outside of a kind of low price point.
Yeah.
Second is banking. There are two things about banking. One is banking is super complex. The technology stack behind banks is very diverse. It is very complex, and it has evolved over a period of time. Right. So you have to consider that as you are thinking about your own journey. Because if you think that something is going to take X hours, assume that it will take 5X. Right? Because the
integrations
are so complex and all of this. The third is the regulatory and kind of security, etc. overlay. You cannot work with a bank if there is even an iota of question around any of these. So you will have to get to the bank security standards. You will have to be fully regulatory compliant. There is just, it's not an option. You can't say that, no, we'll figure it out, 3 months down the line.
Super helpful. Last 5 minutes, a few rapid fire questions.
Yeah.
Right. What's the worst piece of advice you hear being given to founders building in the BFSI or Fintech space?
I think people look at scale and they get very enamored by the quote unquote TAM. And then they figure out actually that the banks don't pay that much. So, so the TAM kind of shrinks very, very materially.
One BFSI buzzword you would love to kill.
Synergy.
A book or paper that has fundamentally changed how you think about technology.
That big thing about big things, with the Peter Thiel book.
Hard things about it.
Hard things about hard things. Yeah, that one was a good one.
Your favorite go-to AI tool that you use?
For work, I'm on Copilot, but otherwise at home, I am either on Gemini or Grok.
If you had to make one bold prediction for AI in banking 5 years from now, what would that be?
I think this is saying that the more the things change, the more they remain the same. So I think AI will be quite seminal in the way it changes banking. In the notion that it will release a lot of productivity and great use cases for customers and so on and so forth. But at the end of the day, banking remains what it has for over many, many thousand years now, which is it's about trust. It's about making right lending decisions. It's about getting the right customers in, etc., etc., etc. Those fundamentals don't change at all. So AI is going to dramatically change banking, but at the same time, banking is going to remain what it was many thousand years ago.
Perfect. With that, we close the show. Thank you so much, Samir, for taking the time and sharing so many useful mental models for founders who are building this space to think about. Thank you very much, everyone.
Thank you. Thank you very much.